Hi, welcome to Guide to Social Security Part 2. My name's Pete Benson with Beacon Capital Management, one of the founders and senior partners there. And there's a lot to learn about Social Security. And we've done a three-part segment, so hopefully you've gotten an opportunity already to look at Part 1. And in Part 2, we're going to talk about taxes and just some of the things that impact Social Security and your overall cost of Medicare and how important that is. So, now as you're in the heart of your working years, you are contributing 6.2% of your pay to Social Security all the way along. 6.2%. And your employer is matching that 6.2. So 12.4% of what your income would be is being contributed into Social Security. And that's a pretty big amount. If you are self-employed, you pay the employee's part and the employer's part, so 12.4% is going into this. So having an opportunity to make great decisions on how to maximize Social Security and decrease the taxes on it is a very, very important thing. Now, if you make wages over $137,700 in a year, then you do not pay the Social Security taxes during your working years on the amount above that. So it's only up to, again, $137,700. There is a domino effect that goes along with your Social Security. It impacts so many different things: Medicare, your other income, your overall benefits, cost of insurance. There's just a lot of things to make sure that you're considering when you make the choice of Social Security. One of the decisions that you make could actually double your Medicare premium. So you have to be careful that the benefit of one thing doesn't hurt something else, because what you pay in Medicare is not a set amount for every U.S. citizen and every person who has worked and every person who is a beneficiary of that. So doing good planning to make sure that you maximize your income, but you minimize your taxes and minimize what you pay for Medicare is something that can be done if you plan ahead. Now, the amount that's owed for Medicare, what the Social Security Administration looks at is the income on your tax returns for the 2 years up to that period. So make sure that those 2 years, you really put a lot of thought into it, because those 2 years are what impacts what you're going to pay for Medicare maybe for a long, long time. So again, Medicare it begins at age 65 if you are already taking Social Security before that, because remember, you can take it at age 62 up through 65. So if you're already taking it, you are automatically enrolled in Medicare Part A and Medicare Part B. But if not, then you've got some decisions that you need to make. And again, think about the tax impact. So in 2020, the Medicare taxes that you pay are 1.45% that you're paying for that if you're in your working years. And again, your employer is matching that with another 1.45. So 2.9, almost 3%, is being paid to cover the benefit of your Medicare when you're in your retirement years. So again, you pay that Medicare tax on everything, no matter how much you earn. So if you're making 200, 300, 400, 500,000, you know, that adds up. So again, you want to make sure that when you're in your retirement years that you get the benefit that you paid for. If you are a higher income beneficiary, so that's a good thing. We all want to make as much as we can, but understand that you're likely going to pay more for Medicare Part B. It's not the same for everybody. Again, if you are a high income earner, then you are going to pay more. But again, there are ways to plan around that, just being smart so that you can pay the least amount that is legal and get the most amount of benefit. So the Medicare premiums are based on what we call MAGI, okay? Modified Adjusted Gross Income. And so that's something that has to be worked on. If you have a CPA, an accountant, or if you're good at that yourself, you need to consider that that is what they used, Modified Adjusted Gross Income. So that's the total adjusted gross income plus even tax-exempt income. So there are certain ways to benefit through dividends and interest from things that are tax-exempt, but they actually do count towards the income that you're going to have for the year, and that will impact even that tax-free income, depending on where it's from, can impact how much you're going to pay for Medicare. Now, if you are a single individual and you make up to $87,000, then what you're going to pay for standard B coverage for Medicare is about $144.60 a month, okay? So if you're single, you make up to $87,000. If you are married and filing jointly and your income is up to $174,000, so less than $174,000, you are going to also pay $144.60 per month for your Medicare. But you can see here on the board that as you begin to earn more, if you are a single person earning more than $500,000 a year, then you could pay $491.60. So that's a lot more. That's almost $500 a month, $6,000 a year that you're going to pay for your Medicare. And if you earn more than $750,000 for a married couple, then again, you each can pay $491.60 for your Medicare coverage. So again, making sure that you know where that income comes from, planning well ahead, and especially those few years leading up to age 65, this is something that you should be planning for, not in a vacuum, because again, there's a lot of people that leave money on the table in Social Security, other benefits, that are overpaying for benefits because they haven't planned well. So we recommend that you find a trusted individual that you can plan with to make good decisions. According to Bloomberg, there are Americans out there that are leaving up to $100,000 of benefit on the table because of not good planning. The Social Security Administration will help you up to a point, but they're not there to necessarily help you maximize your Social Security and minimize your Medicare by doing income planning. You need to find an individual that will work with you because all the pieces fit together like a puzzle, and you want to make sure you've considered everything. So I hope this has been helpful for you again, and if it has, then be sure to pick up and listen to part 3 of our Social Security guide as well to get more information.